Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Hey everyone, looking at the US sector here, and we've got OWCP thrown in, which is an Israeli company, but certainly getting some attention, so we'll cover that as well. Also going to be looking at SMG, one of the legitimate investments in the US sector, Scott's Miracle-Gro. It is not a penny stock. It's a big name, solid company, and GWPH and SMG are definitely at the lead for legitimate marijuana U.S. plays. So let's start with MJNA. It's the leader of the penny stock sector in the U.S., and impressive bull move here. And we saw the bull breakout from this very tight range as soon as 12.5 broke. We had the bull breakout, consolidation, big time breakout. This was a big, scary day on huge volume. The bulls held the middle Bollinger Band on 2 tests. This is a bullish hammer, and then we saw follow through to the upside. So now we have our lower high and higher lows. The range right now that I'm watching, 16.5 support, and resistance is 18.4. Break of 18.4, and we're looking up at 21.5. Break of 16.5, and we're looking at the middle Bollinger Band on the daily, which is currently in the 16-cent range, the low 16s to start next week. You can see the volume is trending down and dropping off as this range tightens, and we see a break is likely this coming week. We have 4 trading days, and we'll see if we get a volume spike and a clear break over either 18.4 or 16.5. So the bulls overall are looking good on the weekly time frame. Very nice follow through after the consolidation from the pre-election breakout, and we now have a lower high to watch. But overall, bulls holding exponential moving average support. This is a really strong start to 2014, and certainly not a pump and dump in terms of giving back those gains from pre-election. Now we need to be cautious because the overall pattern in this sector is to pretty much sell in the spring, and we see very, very little bullish action in the spring and summer, generally speaking, on the whole. So need to be aware of that, and would certainly be watching very closely as we approach February and March for any indication that the tide might be turning. But as of right now, the weekly time frame certainly favors the bulls, and as long as the sector leader stays strong, we anticipate a lot of these other names to stay strong, and you see CBIS is doing the same. Looks like CBIS is about to make a bull break, actually. Look at the volume spike. So we had a bull break in line with MJNA, breakout, consolidation, new support established at 531, and now we're seeing a tightening pattern where we had lower highs. So resistance 727, 72, 7 even, and we just hit 7-1. So that's a break of the lower high pattern, and look what is accompanied by that break. That spike in volume. You will see that time and time and time again on every time frame. When you see a tightening range break, it's accompanied by a spike in volume. So oftentimes that volume indication can happen before the price break occurs. And if I was looking at CBIS, let's say, and in the first hour of trading, I can see, oh man, we already have 30% of yesterday's total volume, and we're only an hour into the day, I can then assume that we are going to see an increase in volume, and it's going to break this decreasing volume pattern. And if it's bullish momentum first thing in the morning, I know to be looking to the upside. So oftentimes volume can give you a heads up before the price break occurs from that tightening range, which happened once 7 cents broke. So the bulls are in control here, and we're going to be looking up at 7.2 and 7.27 resistance to start next week on Tuesday. And if we can see anywhere near 49 million shares traded, we're going to see a nice further follow through to the upside. So keep an eye on CBIS. It is a lot closer to that bull break than MJNA. And if we get that bull break more convincingly up to the low 7-cent range, then we're going to be watching for MJNA to follow suit and head up to 18.4 and then potentially 20 cents. Weekly time frame for CMG. Look at this clear 7 cents resistance on the weekly, rejecting the price 1, 2, 3, 4, 5, 6 times on this breakout. Still the same thing here. Very strong for the bulls. Very nice recovery from that dip. And we are looking to break 7 cents and see some continuation. We cannot lose sight, however, where we are coming from 2014. Big time pullback. Tons of work to do here. We've got resistance at 8.2. We've got resistance at 10 cents up to 13 cents. There's all kinds of resistances still here. And that's why some of these newer names that don't have all this price trading history from years ago don't have these resistances to go off of and are in a better position with that regard. But the bulls are looking good on the weekly time frame currently. And we're going to look to see if we can break 7.7 and see some nice continuation to start the 2017 year here in January. AMMJ, very clear bear break. So we can see here we had a breakout. It only lasted a couple days. You see names like CBIS and MJNA. They ran above their upper Bollinger Band for 4 to 6 days. 1 day breakout, pullback, consolidation on decreasing bear volume. So at this point, this consolidation looks just fine for the bulls. We established a low of this consolidation at 8.6. And then we got tight, and saw the volume get tight as well. We saw an uptick in bull volume, but the price action didn't follow with it. So we know that a break is imminent. And once we fell back, look at resistance here. It was 9.4, 9.4, 9.5, and 9.45. So a ton of resistance in the mid 9-cent range. And then once we broke 8.6, that's your clear exit signal, because we then have a lower high and then a lower low. And that occurred here. We also lost the middle Bollinger Band the same day, and then it's been met with 2 days of downside on increasing bearish volume. So overall, the uptrend is still intact. Going back to the end of November, we have these higher lows still holding up. We're looking at 69 cents, and then 72, and then now 74. So the uptrend is still intact. The bulls really want to hold 721, the low from the end of December, for the next week and try and turn this trend around. So a bit of a setback for the bulls by losing that level. The weekly time frame, you can see the big upper wick on the weekly shows profit taking, and it's been followed by 2 weeks of bear action on increasing bear volume. Middle Bollinger Band weekly support is going to be just under 70 cents starting next week, and that's going to be a key support level to watch as well. NDEV also had a clear bear break, and we had our breakout, and this is that reaching an equilibrium. If you watch my videos, I talk about it a lot. So a clear bull break, consolidation low of 91 cents, lower high at 136, higher low at 101, lower high at 120. You can see this range tightening. You can see the volume dropping off. And as soon as we broke 101, very, very clear bear break, because the higher low pattern breaks, and we then have a lower high and a lower low. Not only do we break 101 support, but we break $1 psychological support, and that's a very key level as well. And when that break occurred, we saw a drop of 20% that day. Bulls did buy the dip, granted, but we saw no follow through the next day. Bulls struggling to hold this middle Bollinger Band. We held it again, but then look at the spike in volume for the bears on Friday. Closed below that middle Bollinger Band. We're now looking down at 80 cents. And then I would be looking at 73, the low from December 27th. So the bears are taking over. Bear volume shows that very clearly on Friday. The bearish TCG cross with the 4-period exponential moving average crossing the 8-period to the downside. That occurred 2 days before that clear dump on Friday. And the weekly time frame still perfectly fine. If you're a long-term bull, and again, I keep saying it all depends on your time frame perspective. If you're a short-term bull, you're exiting on that 101 break. If you're a long-term bull, you have nothing to worry about. It would require a break of 20 cents to break this uptrend. Obviously, you don't want to pull back that much. But as of right now, this is normal, healthy consolidation. We saw a bull break of a 200% move in a month, and now we're consolidating. And as long as we keep forming this stair-step pattern, the bulls are fine on the weekly time frame. OWCP, full-on breakout mode, and a lot of people compare this to GWPH just due to the patents and the pharmaceutical, or I should say the biotech aspect. So we had a very clear bull break, and here again, tighter and tighter and tighter, volume completely disappearing, bull break, clear bull volume, and it's been nothing but a breakout since then. Big volume now coming in, and we are overbought. The RSI is at 93. I would not touch this name bullish at this point in time. The risk to reward does not favor reward by any way, shape, or form. Now, that being said, you can be making day trades. This is a nice day trader because you can see the range, 39 cents roughly to 55 cents. Big time range. Day trading opportunity is absolutely here. If we close up near the high of the day, that indicates a gap up is likely. So we'll be looking for some continuation, at least to start the day on Tuesday. But I would be very, very cautious. I wouldn't touch this thing bullish. And if you're already in it, congratulations. But I would be walking a stop loss up and looking to lock in profit because you will absolutely get an opportunity to enter at a cheaper price than where we currently stand. Look at the bull volume drop off bit by bit, showing the bulls tiring a little bit. Upper Bollinger Band is still support. As long as we close above the upper Bollinger Band, the bulls are in control, and we've been in breakout mode, back testing and holding that level the past few days. This upper Bollinger Band is going to be in the upper 40-cent range on Tuesday. Update that level. If we close below it, we know consolidation is likely, and we will be looking for that consolidation in the short term. The weekly time frame, however, very, very bullish. Breakout, consolidation, continuation, and further upside. This is a bull flag pattern. Nice clear bull break, big time volume spike. So it looks like first thing this coming week, we are going to see another push to the upside, but we need to be cautious that this is the final push before some profit taking and consolidation. So again, as a longer term trader, as a day trader doing this for years, there are opportunities where I pass up bullish entries on breakout plays, and absolutely the stock will keep running. And I say, oh man, if I had gotten in, blah, 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 I could have made $1 million. I always pass that up. I don't lament and waste time thinking about what could have been because I know more often than not, if I were to make an entry with an RSI at this level on the daily, and if I were to do that 10 times, I would lose more than I win. So I want the odds in my favor. I will absolutely pass up some runners and miss out on some gains to ensure that statistically I have consistency on my side for the long term. And last, we got SMG. This is a really nice long-term bull and a legitimate company, Scott's Miracle-Gro. They are buying the hydroponic sector. They are buying up providers in anticipation. They want to be the axes and picks, so to speak. That's the wrong thing. Picks and shovels for the gold rush back in California. Picks and shovels salesmen made all the money, and they are looking to provide the tools for these marijuana growers as sentiment continues to shift. So we are consolidating. Look at the weekly chart. It's been a 50% gain year, and we are on the NYSE here, the New York Stock Exchange, and you don't see 50% gains very often in 1 year. And that's what we have here, an all-out beast, higher lows and higher highs. But after a tight range here, you can see how tight we got on the daily. Look at the middle Bollinger Band, holding, clear break, and now we're consolidating. This looks like a bear flag pattern, which occurs after a dump, a little short-term bounce before continuation to the downside. So I would not be looking for a bullish entry at this point, but I would be scouting for a bullish entry. I'm looking at $90 psychological support. Look back here. We back tested and held this level 1, 2, 3, 4, 5 times. $90 clear psychological support. That would be a target to keep an eye out for. And if the bulls do show up and get this middle Bollinger Band back as support, we know it's unlikely we head down to that $90 level. But as of right now, I am looking for further downside, and that's because of the weekly chart too. We got really tight, a clear spike in bear volume, a break of the support we'd seen over the past month, and that has me looking for further downside. $90 was resistance here on the weekly, then acted as support. So I think $90 is a good target to be keeping an eye on. And again, this is one that you can potentially put in a long-term retirement account because it's not going to be something like a penny stock where you have to worry about dilution and pump and dumps and all that. This is a solid company, and they are certainly diversifying into the marijuana sector, and you can see that, and investors and traders see that all of 2016. So I hope this video was helpful. I appreciate you watching. Feel free to ask any questions, any likes and shares if you found it helpful. Certainly appreciate it, and I will see you soon.